The big run-up in global food and fuel prices has pushed India's inflation rate to a 7-year high of nearly 9%. Most Indians survive on $2 a day, and the World Bank says much of that is spent on food. As Raymond Thibodeaux reports from New Delhi, rising inflation could be a sign India's economic boom is winding down.
Most ordinary Indians buy their food from neighborhood food vendors like Thibodeaux. She's had to raise her prices so many times in the past 6 months that she's having trouble keeping her customers.
The farmer also has to take care of his earning. He also has to pay for fertilizer and water. We are buying it from him at a higher price and we're selling it at a higher price. This is why our customers are arguing with us.
Sharply rising food prices are a serious concern in India, home to more than half the world's hungry. Even small hikes in the price of lentils, rice, and vegetables are keenly felt at dinner tables across much of the subcontinent. Food riots already have broken out in some parts of the country. Several factors are behind the spike in food costs. Surging oil prices make it more expensive to transport food from the farm to the market. Flooding and prolonged droughts have trimmed harvests around the world. Also, ramped up production of ethanol from food crops, particularly in the U.S., is taking an increasing share of the world's food supply. Top Indian economist Rajiv Kumar says inflation and higher food prices are hitting India at a vulnerable time, as the country weighs the domestic fallout of the U.S. economic slowdown and its spillover into other emerging markets. The U.S. is one of India's biggest trading partners.
The U.S. slowdown is impacting India's economy in several ways. First would be a slowdown of export demand, and that will affect our exports to the U.S. The second would be the demand for invisibles exports, which is like software exports and tourist incomes. And then third would be the withdrawal of equity funds from the Indian stock market as these go back to safety.
Rising labor costs and an overheated rupee have forced some U.S. companies, also stung by weak sales at home, to scale back orders of Indian exports, such as clothes, leather goods, and handicrafts. Some industry experts say as many as 4 million jobs in India have been lost in the past year, due mainly to cuts in U.S. demand for Indian exports and technology-related services. Rajiv Prem, a clothing manufacturer in Gurgaon, just outside New Delhi, makes clothes for several U.S. retailers, including H&M, Motherworks, and Anthropology. The drop in U.S. orders has forced him to close one of his 3 factories and lay off about 400 workers, roughly a third of his workforce.
A lot of factories have closed down, and if the newspapers give figures of almost 1 million workers or more being laid off in India in the textile and the apparel sector because of lack of business from the U.S., the workers who are laid off, it's not, they don't deserve this because it's market forces at play.
To help buffer India's poor against inflation and rising food costs, the government banned some food exports, scrapped some import tariffs, and halted futures trading on some food commodities. India's central bank ordered lenders to set aside more cash reserves as a hedge against inflation. But many of Devi's customers, who are among the country's poor and lower middle class, worry that these anti-inflation measures don't go far enough. In the meantime, many here are hoping for a speedy U.S. recovery to bolster this country's chances of resuming its economic boom. Raymond Thibodeaux, Nightly Business Report, New Delhi.